see. Let's talk about Nvidia, Jessica. We're talking about the run that this name has had, the split, then another run to new highs. Some of your thoughts on Nvidia, where it's headed.
Yeah, and today I really, Nicole, wanted to talk about AI. It's something we've talked about so very often. Last week we were talking about AI agents, and I just really want to talk about where I see 2025 going, which is another leg within that AI revolution. We've got to think when steam was introduced, we didn't have industrial revolution until 100 or 200 years later. So no, it's compounding, and hopefully it's not that long of a process, but it all points back to NVIDIA. NVIDIA is leading the charge in the transformative tech innovation. And I want to point out an event that's going to happen in Las Vegas, January 6th through the 10th. That's the CES. It is where Jensen Huang is actually headlining or opening the keynote to the most powerful tech event in the world. So that event tends to have groundbreaking announcements that shape the tech landscape from many fintech providers, not even just NVIDIA, but lots of technology that's there. I do think perhaps there's strategic timing where that presence would align with, we know, the very, very big event, which is the GTC in March 2025. But I do think anytime Jensen Huang just comes, he gives us a smile. He went on a podcast earlier and the market just rallied. So we're looking for any indications of that new type of innovation. And since there's an event right at the beginning of the year, I think it's a great time to position in preparation for that because we're still in the early stages of AI.
On Tuesday, Nvidia's stock reached a significant level. The leader in artificial intelligence chip stock began trading at the buy point of 140.76 in October, peaked at 152.89, and then dropped below the 50-day moving average on December 10. Stocks should ideally increase after breaking out of bases. However, the stock has returned to the 50-day line. Is Nvidia a good investment right now? Early next year, investors anticipate two significant events. Comments made by Chief Executive Jensen Huang at the annual CES conference, which begins on January 5. For big tech, the conference is a significant occasion. Then, during its GTC conference in March, Nvidia might unveil the GB300 Blackwell AI server. The dates of the conference are March 17 to 21. Following Morgan Stanley analyst Joseph Moore's designation of Nvidia as a top 2025 selection, shares increased by almost 4%. However, Moore lowered his price objective for the stock from 168 to 166. Delays in the fabrication of Blackwell chips are not anticipated by the expert. Although a slowdown in the older Hopper processor is anticipated, Moore stated that this is good news because it will free up more high-end memory chips for the Blackwell line. The analyst added that he expects the largest consumers of application-specific integrated circuits, or ASIC, will return to graphic processing units, or GPUs, based on his discussions with customers. The ASICs that its competitors are concentrating on are designed to serve a single function, whereas NVIDIA's GPUs can be utilized for multiple AI functions. Jordan Kleen, an analyst at Mizuho, pointed out that although bespoke silicon will rapidly overtake GPUs in market share each year, GPUs will still dominate training. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Let's take a look at the chart. Kevin Green.
Well, the chart's still bullish here, Nicole. We have seen a little bit of a consolidation over the last, 2 weeks, 3 weeks, but the trend is still to the upside. And one thing to kind of note when it comes to NVIDIA is this cross for the MACD has actually been a really good indicator when you're looking at the daily time frame, a 1-year daily time frame here. And for Jessica and being, optimistic, this cross that's actually taking place right now, which the 12 EMA is going to be above the 26 EMA, is really bullish for this name. And usually in the past, when we have seen these crosses, the stock has moved moved around $30 to $35 to the upside once that actually does take place. We also saw a little bit of a reset when it came to the RSI, just showing that price momentum did kind of stall out. It did make lower highs as well as lower lows, but it is kind of contesting that trend right now. And we are continuing to see some support coming in at around $129. Last week, we saw the stock get down to around $127 and saw aggressive buying stepping in here. And that's actually being reflected within the volume profile that has been an area of resistance, now has turned into an area of support. So if you are a bull, you want to be able to hold 129 and continue to see some buyers stepping in. And if we do break that and go below, then you're looking at the 200-day moving average, which is sitting at around $119 for right now. Immediate area of resistance is going to be $150. A lot of options positioning sitting there. And if we actually do exceed that level, I would look at the next area of resistance at around $160, which would be the upper end or the resistance level on that channel line. So this one's still bullish, still has some indicators that really suggest that maybe it just had a nice little reset before trying to move higher.
When Google revealed a new chip named Willow on December 9th, quantum computing made a resurgence earlier this month. Google claims that the new processor enables it to do a very difficult mathematical problem in less than 5 minutes, when the most potent supercomputer currently in use would have needed more than 10 septillion years to finish. A septillion is 1 plus 24 zeros. The scale is too great for the human brain to comprehend. Undoubtedly, this accomplishment should alter the way that computers do calculations nowadays. A worker working at a quantum computer on a tabletop in an engineering lab. Nvidia's Blackwell GPUs remain the talk of the town despite the advancements mentioned above. Even though they are the most potent GPUs available right now, they should undoubtedly be dwarfed by what Google has accomplished. In actuality, Nvidia is still relevant because quantum computing involves more than just swapping out your laptop's CPU. For general-purpose computing, conventional laptops with CPUs and GPUs remain more effective. So how does the breakthrough in quantum computing benefit Nvidia? Regardless of who produces the best CPUs, Nvidia benefits in these 3 ways. Building a quantum computer is quite costly. Building quantum computers merely to see if they can complete specific jobs is not feasible. Therefore, before anything tangible can be constructed, a great deal of simulation labor is required. The GPU from Nvidia can help with that. The simulation runs more quickly and produces the intended results with a more powerful GPU. Second, quantum computers will always coexist with conventional computers in a hybrid environment, even if they do become the standard. The greatest computers will once more be needed in this hybrid environment to support the quantum computers, which means that Nvidia's GPUs will be needed, but only in a supporting capacity. Finally, just as Nvidia's proprietary software has allowed it to dominate the GPU market, Nvidia is still supporting software for quantum computing. The NVDA key platform gives programmers the tools they need to create code that runs on both traditional GPUs and quantum computers. By becoming the best software provider to close the gap between traditional and quantum computing, Nvidia not only contributes to the advancement of quantum computing, but also strengthens its economic moat. In this sense, despite not producing quantum computing hardware, Nvidia stands to benefit greatly from quantum computing. For the bears who believed Nvidia had peaked and sold every GPU it possessed, there is something to consider. After I, there's more. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts. So hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Melissa, thanks for being here this morning. Let's start with some Nvidia. The share's back above $140, but kind of been a sleepier second half of the year compared with the first half and last year. Tell me what you think happened here. Did things just kind of take a little bit of a break?
Happy holidays. It's great to be here. Thanks for having me on today. I mean, Nvidia's at an interesting point in its potential momentum. Coming into the first half of this year, there was a lot of acceleration in demand for their chips. Coming into the second half, we started to get questions about Blackwell and what the direction of Blackwell was going to start to look like. The company guided to several $billion in revenue in the fourth quarter, but then the market has started to look to next fiscal year and where the momentum is really going to start to accelerate into the certain quarters. Now, there's a lot of debate out there about how Blackwell is going to start to shake out and what that acceleration trajectory is going to really look like. And that's why we've seen that.
What are the potential outcomes for Blackwell demand? Do you view them as being largely positive? Is there a wide range of tail risk outcomes, or is this mostly a forecasted, visible demand?
When we look out 2 years, there's over $100 billion range in the estimates. So there's clearly bulls and bears out there. Looking out to next year, there are analysts that are clustered at or below 40 billion in revenue for Blackwell and at or above 100 billion for Blackwell. And that tells me that if you get consensus that is trending either well above or well below those expectations in terms of where the numbers are converging, then I think we could see some volatility in the stock.
Good numbers to know, to have on our mind.
Although Nvidia stock has increased 2.7% over the last 4 weeks to conclude the most recent trading session at $139.67, if Wall Street analysts' short-term price estimates are any guide, there may still be a significant amount of potential left in the company. The mean estimate of $175.55 suggests a possible upside of 25.7% based on the price projections. With a standard deviation of $16.81, the average includes 42 short-term price targets with a range of $135 to $220. The most bullish prediction suggests a 57.5% gain, while the lowest estimate shows a 3.3% decrease from the present price level. The standard deviation is more important to consider here than the range since it clarifies the estimate's variability. Analyst agreement increases when the standard deviation decreases. Even while the consensus price goal is a highly sought-after indicator for investors, it might not be prudent to base an investment choice entirely on this metric. This is due to the long-standing doubts about analysts' impartiality and skill in determining price targets. However, Nvidia has other signs of possible growth besides an excellent average price objective. This opinion is reinforced by analysts' strong agreement that the company can generate stronger earnings than they had previously projected. A positive trend in earnings estimate revisions has been shown to be effective in forecasting an upside, even though it does not indicate how much a company could gain. Strong consensus among analysts to raise EPS projections suggests that they have recently become more optimistic about the company's profits prospects. And there might be a good reason to anticipate that the stock will rise. After all, empirical evidence indicates a substantial association between short-term stock price movements and trends in earnings estimate revisions. Since one estimate has grown in comparison to no negative revision, the consensus estimate for the current year has increased by 0.4% over the past month. Furthermore, Nvidia is presently ranked number 2 by placing it in the top 20% of over 4,000 stocks that we rate using 4 earnings estimation-related metrics. This is a clearer sign of the stock's possible short-term growth given its strong externally audited performance history. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.